Tax is likely to be the biggest expense you'll pay in your life, but here's something a lot of people still don't know about tax. You can actually reduce this amount by thousands of pounds, and I'm going to teach you how to do just that. Hello friends, welcome back. To those of you who are new to the channel, I'm Farshid and I'm an accountant turned consultant, and in today's video I'm going to reveal the easiest ways in which you can legally reduce your taxes so you can keep more of your money. But before we get into the details, this is not financial advice. I'm making this video purely for educational purposes to teach you what they should have taught you in school. It's always best for you to seek advice from a financial advisor in your country who understands your specific financial situation and can give you advice tailored to your needs and relevant to the country that you live in. If you're still here, that means you're ready to learn how to pay less tax. So let's get right into it. For those of you who don't understand taxes, I'm going to give a very short summary on income tax. And for those of you who has some sort of understanding, then there's timestamps on my video, so you can go ahead and skip to the next part, but I would highly advise that you listen throughout because you might miss something really important. Let's start off with how income tax is calculated. I know other YouTubers have talked about this, but they're so right. You'd be surprised at how many people still think that they get taxed a certain percentage on all of their income. I actually asked somebody just before making this video how much they think they're getting taxed, and they told me they're getting taxed 20% on all of their income, and this is simply not true. With income tax, we have something called tax brackets, and portions of our income will fall into different tax brackets depending on how much we earn, and every pound or dollar that falls in those different tax brackets will get taxed at different rates. These are the tax brackets for the UK. It might look a little bit different if you live in another country, but the concept is more or less the same. The percentage goes up as you start earning more money. And I know the numbers look confusing right now, but stay with me. It's actually really simple to understand. To make this easy, let's imagine that tomorrow we wake up to find out that as an employee, we now earn 100k a year. The first portion of our salary, the £12,000, will fall within the first tax bracket. This bracket maxes out at £12,000, and this is taxed at 0%, which means that we don't pay tax on this amount. This is called your personal allowance. The second portion of our income will fall into the second tax bracket, and this maxes out at £50,000. So you have your first tax bracket maxed out at £12,000, and then £38,000 of our income will fall into the second tax bracket to max that out at £50,000, and the remaining £50,000 will fall into the third tax bracket, and this maxes out at £125,000. But we only have 50k remaining, so our tax bracket is not going to be maxed out, unfortunately, with our measly 100k income. So based on the calculations on screen, you'll have to pay £27,600 in tax. Once your income starts to go above £100,000, then you start to lose your personal allowance, meaning you end up paying a lot more tax. We can go through that in much more detail in one of the future videos, but now that we've covered the basics, let's move on to the main part: how to reduce your taxable income. The very first thing you need to do is check your tax code. I know this sounds really basic, but I've had people ask me tax questions in the past and complaining that they're being taxed too much, and it actually turned out that they were on the wrong tax code. If you're on the wrong tax code, you could be paying a lot more than you need to. So firstly, make sure you're on the right tax code so you're not paying too much. If you have one source of income, then your tax code really should be 1257L for the current tax year, which means that you're entitled to a tax-free personal allowance of £12,570, which we just covered in the previous section. Now on to the second method. One of the easiest ways to reduce your taxable income in the UK is to invest via a stocks and shares ISA. And in the US, you have something similar called a Roth IRA. The ISA allowance is one of the most tax efficient ways to save and invest. If you live in the UK and you're over 18, you can pay up to £20,000 into a stocks and shares ISA each tax year. And for the Roth IRA, the limit is set at $6,000. The money that you invest in an ISA is sheltered from any income tax or capital gains tax. So if your investments go up in value, then you don't have to pay capital gains tax when you sell your investments. And also if your ISA generates income, then you don't pay income tax on that. I'm currently using moneybox, which is an award-winning mobile app that makes my ISA investments really easy to track. I'm able to access all of my ISA accounts in one place and also see a breakdown of how my money is invested, whether it's on global shares or bonds. I have the option to build my own investment portfolio by customizing my investment allocations, or I can choose from one of the starting options, which are cautious, balanced, and adventurous, depending on my risk appetite. I can add money into my moneybox as a one-off, or connect my bank card and set up an automated weekly transfer. And I can choose to round up up and invest my spare change as well. They're also FCA regulated. They're not sponsoring this video. I'm just very fond of the app. You can also consider opening a lifetime ISA. Any money that you put into a lifetime ISA is also sheltered from capital gains tax and income tax. I covered this more in detail in one of my recent videos, which I'll link up here so you can check that out. But one of the best things about the ISA account is that the government will add a further 25% to what you pay in, which is essentially free money. And on top of that, you will earn interest on whatever you've saved. And this interest is tax-free income because it's an ISA account. The next method is another easy way and probably the most popular way to reduce your taxable income. And it's by making pension contributions in the UK or paying into your retirement account or 401k in the US. You can either contribute to your pension as an employee or as somebody who has their own business, or a bit of both. In the UK, you can pay in up to £60,000 a year, which is the current annual allowance. And what makes this a really popular choice is that when you put money into a pension scheme, your employer also makes a contribution. And on top of that, the government tops it up with a tax relief. So essentially, your employer and the government is giving you free money. So with our 100k salary, if we decide to use the full allowance and put £60,000 towards our pension funds, then this reduces our taxable income to £40,000 and we end up paying £5,600 in tax. And that 60k that you've put into your pension fund is invested into things like stocks, bonds, real estate, and other assets. This means that it will generate income like any other investment. However, unlike other investments, this generates tax-free income, meaning that you don't have to pay tax on your investments if it goes up in value. If you have a child or a spouse that's not earning income, then you could also pay money into a pension fund for them. And again, the government will give you a tax relief on top of that, which is free money. Not many people know about this method, but you can take advantage of this as well to reduce your taxable income. If you're making more money than you need, then making a pension contribution could be one of the best ways to reduce your taxable income. This money is, however, locked away and you can only access it once you reach retirement age. You can access this early, but there's some rules around it which you'll have to read up on because you could end up paying heavy tax on your withdrawals. And lastly, one of the best tax efficient ways to earn income is to set up the structure to pay yourself as a director of a limited company. This is great for if you have a side hustle or if you want to operate as your own business. Now, if I choose to go down the contracting route, I can set up a limited company and operate as a business. Then I'll be paying something called a corporation tax, which is currently at 25%. So as an employee on a 100k salary, we would pay £27,600 in taxes, which leaves us with a take-home income of £72,400. But now let's say that I was earning that same 100k as a business rather than an employee. Now, before making any tax calculations, we can actually deduct a lot of expenses from our income, like a share of my house bills if I'm working remotely, my travel costs, any equipment that I need to carry out my work, like my desktop and other office equipment and accessories. I can also deduct expenses for up to 7 years before I even set up my company. So if I bought a laptop quite a few years ago and I'm using it for work, I can expense that. So say our expenses come to about £30,000, then we deduct this from our income and pay 25% on what's remaining. For our imaginary 100k income, we also get a marginal tax relief, which we can deduct from our tax figure. So according to the calculations on screen, we'll have to pay £15,250 in corporation tax. Comparing this to paying income tax as an employee, you can see how much less we pay when we operate as a business. This amount will be even lower once we make pension contributions, like we discussed earlier. So you can see why people would prefer to have their own company. If your business is successful, then no matter how much you're earning, you will still only be liable to pay 25% tax on your income. And you have many more ways to reduce your tax bill. There are also other methods we can explore in which you can lower your tax bill. There's things like using a marriage tax allowance, salary sacrifice, gifting to charity, but these things we can keep for future videos. And I want to hear from you guys. What topics would you like me to cover next? Drop that in the comment section below. I'm currently working on a video about high income skills worth learning, so don't forget to subscribe. You don't want to miss that. So there you go. Now you know how to reduce your tax bill. The next best thing you can do is watch my video on the 7 best purchases you can make, which I'll link up here. Thank you ever so much for watching. Take care, and I'll see you over there.